Hi there. Welcome to Prices at the Pumps once again. I'm Scott Squires, pleased as always to be joined each week by our energy expert, Dan McTeague. Dan, a couple things to talk about this week as always, but let's get into what folks typically want to know right off the bat. In this region, Nova Scotia, Prince Edward Island, and Newfoundland and Labrador, where are you seeing the price trends going for this week?
Well, for Newfoundland and Labrador, it's down almost a penny for gasoline. Probably 0.8 of a cent, but I'm sure they'll adjust that to a more obvious number. Diesel, however, is up 2 cents a liter, and heating oil up about 6 cents a liter. So if you need furnace oil, whatever, you may want to think about filling up. Although I haven't looked at the PUB, sometimes they change the night before. They don't wait until the next day. So on the diesel distillate side, not great news. On the gasoline side, not a bad situation. But for Nova Scotia, for Prince Edward Island, and for New Brunswick, that now wait until Friday to provide the price changes. It looks like we'll have to wait and see what the Energy Information Agency says about gasoline inventories. But at this point, it looks like about a penny savings for gasoline as well. And diesel likely to go about 2.5 cents a liter. So almost mirroring what's happening and what will take place Thursday, tomorrow for Newfoundland. We're going to pretty much see the same thing across Atlantic Canada. And that isn't a great number considering where we've been over the past year. The numbers are pretty stable. We sort of see this lateral move right now as markets are pretty panicky over the U.S. Fed and interest rates.
Today being March 1st, psychologically, it's kind of human nature to feel, we've gotten through the worst of the winter and the cold weather. January and February are behind us. But in real terms, in what's happening with markets and where prices may be going, yes, it may be March 1st and January and February are in the rearview mirror. But where are you seeing trends headed, into the early stages of March as we go towards spring?
Well, I think this year is going to be a late winter. In many places we've seen a little bit, but it looks like this is going to drag on. And, I'm not sure if the February 2nd, decisions by the groundhogs were correct. One saying it would be a short winter. The two that went with it, in your own backyard, made it pretty clear that there was going to be a longer winter. And I believe that will continue to be the case, which means diesel prices will remain very, very robust and likely move up a little higher, as will heating oil, right until the first or second week of April. And let's not forget that come April the 1st, April Fool's Day, in many parts of the country, the federal backstop, the carbon tax, increases 3.25 cents a liter. So all things considered, 11.05 to 14.31 plus 15%. So you're looking at about a 4-cent increase for gasoline, and just a little bit less, a little bit more towards 5 cents to 5.5 cents for diesel. So ultimately, that's the first shoe to drop. March is going to be, I think we're going to start to see those prices move up a little bit, as long as markets can be convinced that interest rates and interest rate policy has very little to do with global demand for oil, gas, natural gas, and other petroleum products.
It's also the time of year where you start to look ahead and think about spring and warmer times. When is that time frame where producers have to switch to that summer blend of gasoline? And what does that mean for consumers?
Well, it begins very much in the U.S. South, where temperatures are already starting to climb. So Arizona, California, and the likes, Texas, are starting to see that changeover in terms of the fuel spec. That will, month after month, change. In 6 weeks from today, we will have in effect the summer blend of gasoline right across Canada from coast to coast, which means you're looking at anywhere from a 4 to 6 cent a liter increase. The blending of summer fuel made to stabilize gasoline and to reduce its ability to, as it were, evaporate or create volatile organic compounds means that refineries will begin the process likely in the next 2 weeks to start to make that conversion. That also has another impact, Scott. It means that refineries go through maintenance, which means they're producing less fuel, which could mean much higher fuel prices by the second to third week of March.
Something else as well is going to affect prices are new carbon taxes coming in. And not that we want to hit the consumer over the head with too much price news in terms of going up. But again, let's just remind consumers what's coming down the road here with carbon tax and the increases that they'll cause.
It's going to be substantial and it's going to be painful. That's because the province had a cap and trade system of a couple of pennies, 2 or 3, 4 cents a liter. Unless I'm mistaken, that will be put to the wayside in favor of the new federal backstop, the carbon tax, which currently sits at 11.05 cents a liter for gasoline, moving to 14.31 and moving up about 3.5, 4 cents a liter every year until 2030. So that means in one fell swoop, and I'm trying to think of the date here, I hope it's not April 1st, but it looks like it is, that could mean a pretty substantial increase for drivers in both New Brunswick and Nova Scotia as the full effect of the federal carbon tax hits not only gasoline, but also diesel. In the case of diesel, we're looking at an increase currently where it stands now, and I'm just pulling out the paper in front of me to get the actual, these numbers tend to range a bit, but the federal number that I have for diesel moves us from 13 cents a liter to 17.38 with HST at 15%. That's 20 cents a liter on top of what you're paying currently, 4 or 5. It's a 15-cent smack right in the chops. So you better hope you get those rebates back, because it's going to hurt and it's going to pass throughout the economy in various areas where, of course, there is no rebate, including food and the HST itself.
So if I were to say to you as a general consumer, as I am, that doesn't have the insights that you do, of course, but if I were to say to you that everything I'm seeing, Dan, tells me that over the course of the next several months and into the summer, that $2 a liter gasoline and higher price for diesel is probably more likely than $1.50 a liter, what would your reply to me be?
Unless markets remain currently panicked, and frankly, to use a disparaging term, bedwetting, which is what they're doing, $2 can easily be achieved. But the circumstances are such that every time there's good economic news, especially in the United States, where that means more demand, like it or not, even with the efficiencies, markets are translating that and believing, oh, no, the Fed will respond. The U.S. central bank will respond by raising interest rates, which will mean demand destruction down the road. At no time when interest rates went up did demand get hit. And so it's a foolish perspective. And what it does is it tends to hold off and delay the inevitable. We need higher prices to cure the problem that we're having right now. And that's demand is pretty strong and supply may not necessarily be there, especially during the summer months. We know that, for instance, and not to get too far into this, the idea that you could somehow sanction Russian oil and force the price down has completely backfired. Russia simply selling it to China and India and making a lot more money for its variant, the ESPO, and of course, leading one to the conclusion that it won't be very long before OPEC decides to raise prices on its best customers in Asia. That will soon follow and cascade here in North America. And also bear in mind, Scott, the Biden administration foolishly misused the Strategic Petroleum Reserve. They have to buy it back. Whatever the price they buy it back at, it means it's artificial demand. So I don't see how this is going to end well for consumers. I don't know if we'll hit $2 a liter, because I don't know how markets react, especially those who have no physical contact with oil and gas, those who are day traders working on algorithms, playing their little computer games during the day, working on little algorithms. That's not how a market works, but that's in fact how the market has been behaving. And unfortunately, it could lead to some pretty surprising and very damaging consequences, including a dramatic increase in prices at some point, which I can't tell at this stage.
I really enjoy statistics across all kinds of different areas. And there's a Twitter account that I follow that puts out all kinds of statistics on a myriad of things. But yesterday, maybe they knew it was prices at the pumps time on the SaltWire Network. They put out a tweet, the 10 largest oil consumers. At the top of the list, United States, almost 20 million barrels per day. China was next at just under 15 million barrels a day. And then India at 4.79, Russia 3.76, down the list. Canada comes in at ninth in this current list, 2.26 million barrels per day. And then at the bottom of the tweet, they say the top 10 consumers in the world use 59.8 million barrels a day. The rest of the world total is 96.66. So the top 10 are using a good chunk of that. I put all that out there to maybe get your response to that in terms of how that can affect what we're seeing on world markets, global markets, supply and demand, and price.
Well, it sounds like those stats are from 2021 and not 2022, because we're already at about 99 million barrels used per day. And that number is likely to increase by about 2.5%, pushing us to 102 million barrels. But it is correct. The nations that you mentioned there are huge users: the United States, China, India, when they constitute probably about 3/4 of the world's population. So using 59%, I guess you can make the argument that it's understandable. But it does suggest that anyone who thought for one moment that Canada is responsible for emissions and we produce big, but we don't consume as big, and we are among the coldest countries on the face of this planet. But anybody who thought that oil was simply going to go away, the Great Reset, the Build Back Better, the just transition, anyone who thought that those things are somehow going to supplant the world's growing need for hydrocarbons, energy, is kidding themselves. Because it's not just used for transportation, it's used ubiquitously in every aspect of our lives. And anybody who says that we can get rid of it, I would actually prefer to go to their apartment or their house and say, shed everything that you have, everything you use on any given day that has an input of fossil fuels, and you'll find yourself living in the state of nature, eating acorns, likely wearing animal skins, but no fires, because that could create a carbon footprint.
Something else I want to talk to you about, and we'll do that next week. This is called a tease in the biz.
Sure.
But I saw an article the other day about, hey, we use synthetic oil. Why can't we come up with a synthetic gasoline or a synthetic fuel for our vehicles, et cetera? But we'll dive into that next week. But for now, Dan, I'll wrap up with you by, again, thanking you for your time here. But when you're not with us on Prices at the Pumps on the SaltWire Network, where can folks reach out to you and find you?
Well, after I do my interview here at SaltWire Network, Scott, you would have to look at Gas Price Wizard to get the gas price update that I'm going to be giving for Friday, usually 2 days in advance. You could also get some of my policy thoughts, and I do write from time to time, usually a couple of times a week when I have a few minutes to spare. That can be found at affordableenergy.ca. I'm president of Canadians for Affordable Energy, and I wear two hats. After 30 years of being in this business from a policy point of view, I don't just bingo call prices. I actually talk about the why behind them.
And we appreciate you giving us the why, because that is super important, especially for the average consumer. Dan, thanks for your time. We'll look forward to doing it next week. Enjoy the rest of your week and have a great weekend.
My pleasure. Thanks for having me. Have a great weekend, Scott. We'll see you next week.
Perfect. Thank you, Dan. Bye-bye.